Over the past month, I've hardly talked about PayPal despite the stock continuing to run up. This has been a very sleepy stock so far over the past 6 months, despite it going up 51%. The stock just has continued to drive up with really no clear catalyst. Personally, what I think is going on with this company is there's a lot more clear vision around where PayPal is headed in the future, and we're going to talk about that in this video here today. We're going to talk about their strategy specifically around their merchants. I also want to take a look at PayPal's valuation. A lot of the market and discussion around the market has been around valuations inflating. So I want to go over PayPal's valuation specifically and give a potential price target for where this stock could go over the next year. So if you enjoy this type of analysis, drop a like down below and make sure to subscribe for more videos like this one. So keep in mind, I do own shares of PayPal. I believe my cost basis is somewhere around $60 per share. I was adding around a year and a half ago. Obviously the stock has ran up 50%, and basically before this run up I was break even. So really in the last 6 months this has turned into a positive winning position for me. However, if you were buying any time before 2023, you're probably still down on your position, especially if you were buying throughout 2021 when the stock price hit an all-time high of almost $310 per share. From that point till now, the stock has traded down 70%. But one of the most positive things going for PayPal has been the addition of their new CEO, Alex Chriss. He joined the team around a year and a half ago and has really started to make changes and formed a vision for where this company's headed in the future. And that really revolves around merchants. They have partnered a lot with companies like Shopify as well as Amazon to build out some of their benefits and what they can really offer to these merchants. And this change in strategy from PayPal is finally starting to show up in some of their numbers. When we look at their total payment volume, their other merchant services has grown from 6% in Q3 of 2023 to 16% in Q3 of 2024. And they have a number of different services that they offer merchants like Fastlane, as well as buy now, pay later services, and a number of other things that they're all offering through Braintree. And this has really helped grow the business and shift the focus away from adding a number of users to really being focused on the merchants and what they're experiencing. At the end of the day, PayPal is a platform that should be focused on how to get more sales for merchants. And that appears to be this change in vision that they're going through because of Alex Chriss. And over the course of the last year, they've focused a lot on building out these partnerships with merchants. However, it looks like this is going to shift in the future. This has been a good strategy to get merchants in and using some of their services. However, now PayPal is looking to actually increase some of the prices for these services. Specifically, they are looking to increase their pricing around their buy now, pay later services. It's currently sitting at 3.49% of the transaction plus 49 cents. They are going to increase it to 4.99% of the transaction plus 49 cents. This change will take place on January 13th, and they had the following statement around this change. These changes are in line with management's price to value strategy, as well as enables PayPal to better show the buy now, pay later value proposition for merchants. And honestly, at first I thought this might not be a great strategy because it could turn off some of their vendors. However, when you look at their competition in this market, they are still going to be at a lower price point. Afterpay is currently priced at 6% of the transaction plus 30 cents, and Klarna is currently at 5.99% of the transaction plus 30 cents. So overall, I personally don't think this is a bad move. It's still going to keep merchants in the door and asking for some of these additional services, and it also helps the company continue to focus on profitable growth. This has been a big point of Alex Chriss's, and he's standing true to this by kind of expanding some of the pricing structure and staying more competitive. But let's take a look at PayPal's valuation. Currently, their forward PE ratio is sitting at 18.62. In the news, there's been a lot of discussion around valuation recently. If we look at the S&P 500, it is currently trading at a forward PE ratio of 22.37. However, for the NASDAQ 100, it's currently trading at a 28.01. So obviously, PayPal is currently trading below the broader market. In my opinion, in 2025, I think that this will change. I think at the very least, they are going to trade in line with the S&P 500, if not closer to the NASDAQ. They are part of the NASDAQ already. They're part of the NASDAQ 100 even, but their growth has been a little bit low, and I think that's the reason why their valuation has kind of faltered. Year over year, PayPal's numbers in terms of EPS EPS are falling. A lot of this has to do with a change in how they actually account for some of their EPS numbers. But a year ago, they put up $5.10. Analysts right now are projecting for 2024 that they'll only put up $4.57. However, this is supposed to grow in 2025 to $4.88. They have a low estimate of $4.55 and a high estimate of $5.16. But keep in mind, when it comes to PayPal, analysts have been a little bit off in their estimates recently. In the most recent quarter, PayPal beat analyst expectations by 12.16%. In the June quarter, they beat by 20%. They missed in the March quarter by 11%, but in December of last year, they beat by around 8.5%. So you can run some numbers based off these EPS numbers as well as valuations. We talked about valuations being somewhere between the S&P 500 and the NASDAQ. That would put their PE ratio really anywhere from 20 to 30. And what I've also looked at in these examples is different earnings numbers. So we have underperform is the $4.55, inline is $4.88, and then outperform is $5.16. That would put their price anywhere from $91 per share to $154 per share. For the $91 price target, what we would be talking about is a valuation of 20, as well as them underperforming when it comes to their earnings and only putting up $4.55 of EPS in 2025. For the $154 price target, that would require a valuation of 30, as well as them outperforming on their EPS numbers, putting up $5.16. And here's really how each of these scenarios play out in my opinion. I think EPS would have to be relatively flat in 2025, as well as revenue growing only 0 to 4% year over year. That's on the lower end of analyst expectations. I think, again, for this to happen for the company, we would have to see a lot of weakness in the broader economy as well. For the inline projection, we would have to see EPS numbers grow 5 to 8%, as well as revenue growing 5 to 8%. And for outperform, I think we would have to see EPS numbers grow by 10+%, revenue grow by 10+%, and overall a strong economy as well as strong consumer spending. In my opinion, I think we're going to see a combination of the outperform and inline performance. I personally believe that EPS is going to grow by 10 to 12%, getting to around $5.10. I expect revenue to grow by 4 to 6%. That's where we see a little bit more inline projections. I think there is going to be weakness in the broader economy in 2025, and right now I think that the S&P 500 is going to trade down slightly in terms of valuation to around a 20, but I think that PayPal will trade somewhere around a 22 forward P ratio. What that will ultimately lead to is a price target of somewhere around $110 to $115 per share. But keep in mind, that is all my opinion. I do think that PayPal will outperform the broader market in 2025. I think that the broader market could see a slight downturn, but PayPal, if they put up decent revenue numbers as well as strong EPS growth, I think that they could outperform and see some solid returns as well in 2025. But as I always say, don't buy a company just because some random guy on YouTube talked about it. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. With all that said, I hope you enjoyed the video. If you did, drop a like down below and subscribe for more videos like this one. And as always, guys, have a wonderful rest of your day. And for the joke of the day, how do elves produce toys so quickly? Check the comments down below for the answer. Thanks for watching.